Time to talk about Brian Sozzi and I's favorite topic, and that is taxes, corporate taxes in particular, which might be, at least if Janet Yellen has her way, going to a fixed rate around the globe, or at least a universal rate, I should say. Our Rick Newman has been looking at this issue. So Rick, basically what she's pushing for is what she says better fairness when it comes to global tax codes.
Yeah, so Janet Yellen, the Treasury Secretary, is now saying she's pushing for what she calls a global minimum corporate tax rate of 15%. The idea here is that if you could get all the developed countries of the world to agree on what the minimum business tax rate should be in those countries, then you'd get less of the profit shifting that we've seen during the last 20 years. The problem with this is you have to get this, every country would have to agree to this on a voluntary basis. And it's not clear that all countries would. Ireland is a standout situation here because the corporate tax rate in Ireland is only 12.5%. That is the sole reason a lot of U.S. companies have operations in Ireland, because they can claim profits in Ireland and just pay that low tax rate, and not pay what is now a lower tax rate in the United States of 21%. So this all happens as the Biden administration is trying to raise the corporate tax rate here in the United States, and they're effectively trying to get other countries to say, we'll have a minimum tax rate to reduce the likelihood that U.S. companies will shift their earnings out of the country.
Rick, for those investors not familiar with this type of tax, how anti-business is a tax like this?
I guess it depends on your outlook. I mean, if the global minimum tax rate is 15%, that's very low. In fact, Yellen has reduced it. She used to be calling for a 21% global minimum tax rate, and now she's saying, well, maybe we'll target 15%. I think that's a tacit indication that she doesn't think we're going to get the tax hikes here in the United States that Biden wants. He wants to raise it from 21% to 28%. And that seems unlikely. It might go up to 24 or 25%. I think investors could take some heart in the likelihood that none of this is going to happen. I mean, this is very complicated. And again, if you just have a couple of holdouts that say, nope, we're gonna set our tax rate wherever we want, we're not joining this kind of agreement, then it doesn't work, because that becomes the new tax haven for all the companies that just want to get their tax bill reduced.
So I could bite and say something to Brian Sozzi about his anti-business framing for that question. But since it's not going to happen anyway, why get myself worked up, right, Rick? If it's not going to happen,
Julie, I think it's always worth getting worked up. Why not?
I guess so. Well, as viewers of the show well know, and as Brian Sozzi knows,
let's take the other side. I mean, U.S. corporations in the United States pay less tax as a percentage of GDP than they have in like 60 years. So the corporate tax almost doesn't work at all in the United States. And you could make a case that we shouldn't even have it, and we should have something else like a shareholder tax. So now that will get Sozzi riled up, I have a feeling.
This sounds like some PE multiple compression / earnings estimate cuts here, guys. Shareholder tax. Rick, Julie, what's going on here?
Yeah, but no business tax. No business tax. Every company in the world will want to come to the United States.
Sounds like a stock market headwind to me.
Bottom line, they can afford it. That's my line, and I'm going to stick with it. They can. All right, Rick Newman, thank you very much. Appreciate it.